A group of over 50 tax experts have called for a one-off wealth tax lasting 5 years to pay for the cost of coronavirus. Any household with a net wealth of £500,000 $671,758, including property, business and investments would pay 1% of their wealth every year for 5 years. This, according to the Wealth Tax Commission, would raise £260 billion $349 billion for the UK's economy. People sometimes say the super rich won't pay. My experience is they are happy to pay, says Emma Chamberlain, a barrister at Pump Court Tax Chambers who advised on the Wealth Tax Commission's report, released on Wednesday, the 9th of December. The Commission's findings tap into public popularity. In an October poll by Ipos Mori, nearly half of Britons said they were in favour of tax increases to pay for the cost of COVID-19, with a wealth tax being the most popular solution. And it's not just in the UK where the idea has become popular. This week, protests in Rome have called for a tax on billionaires and, in July, protesters in New York took to the streets in the March on Billionaires demonstration. A one-off wealth tax would work, raise significant revenue, and be fairer and more efficient than the alternatives, says Andy Summers, an associate professor at the London School of Economics (LSE), who set up the Wealth Tax Commission in April specifically to study the possibilities of a wealth tax. 1 in 6 adults would be affected by its proposals if they were adopted. But others disagree. Responding to the report's recommendations, Katharine Arthur, head of private clients at Haysmacintyre Chartered Accountancy, says that, if the proposals are followed, and the tax's threshold is indeed set at £1 million $1.3 million per household, far more people will be impacted than initially expected. History shows that when wealth taxes are introduced, such as in France under President Francois Hollande in 2014, they drive the wealthy abroad and can stifle innovation and entrepreneurship. Fewer businesses or entrepreneurs would move to the UK if higher taxes were imposed. That poses a problem for that over COVID-created crises, employment. Speaking an event last month hosted by the Resolution Foundation, former Chancellor Philip Hammond said he was sceptical of the net wealth approach to wealth taxes. He said higher taxes on rich people or big corporations was politically a magic combination, but sadly there aren't as many of them as we would like. His comments were in response to another set of wealth taxes posed by the Resolution Foundation as well as the government's own Office of Tax Simplification, OTS, which suggested increasing capital gains tax, CGT. However, despite a growing number of organizations suggesting higher taxes for the rich, there have been no hints that the government will act on all these proposals and actually introduce a wealth tax.